Now, that's good that he ended on the dollar, because that's where we're going right now. We are sitting right here on set. It's a tough crowd. Art Laffer, former Reagan economist, Steve Moore, host of More Money on WABC Radio, two of my closest friends in the entire world. Gentlemen, thank you. Art Laffer, why is gold exploding?
Well, the last time it did anything like this was just before Reagan took office in 1980. It peaked at that. After Paul Volcker had been in the Fed since 1979, we saw it, and it presaged a very big change in policy. And, you know, my guess is that you're going to see gold prices falling quite sharply over the next several years. And I think you're going to see it responding to very good economics, sound money. When Kevin Warsh, who's my choice for the Fed chairman, you've got tax cuts by Trump has done, which are perfect, just what Reagan did. You've got spending controls, which you and Mike Lee were just talking about. Then we have deregulation. Then we have trade issues, which are settling down. With all of that in place, I think it's going to be just like the Reagan era, to be honest with you, Larry. And price of gold went from $800 an ounce to less than $300 an ounce during that period. And I'm expecting that to happen. And I think it is incorrectly very high priced today. And I'm not buying it.
No, it's a very courageous point of view, because I think you're the only person of any prominence, at least, who has said that. But Steve Moore, the question is, why is gold where it is now? Okay, so Arthur's looking into the future. He may well be right. He's usually right, as a matter of fact. But why is it lack of confidence in the dollar? Some people, central banks are buying gold. Inflation is, bad inflation is just around the corner once again. The Fed shouldn't be cutting interest rates. I mean, there's a lot of reasons. And I might add, we still have the charts. We have the gold chart. We have the Goldman Sachs commodity chart. Maybe we can run that. I don't see any corroboration in the commodity index.
They've been stable.
It's very stable. The same is true for there's the Goldman Sachs thing. You can see it wiggles and wobbles, but goes nowhere. The 10-year bond is still around 410, 412, 413. Nothing much is happening there. It is true the dollar has been softer in the last year. Wouldn't be a bad thing if the Treasury Secretary, Treasury has the remit on the dollar, came out and said we would like a strong, stable, reliable dollar. That wouldn't be a bad thing, it seems to me. But, you know, what's driving gold so high?
Well, first of all, Arthur Laffer and I are in town today, Larry, because this is the 50-year anniversary of a very famous occasion when we first learned of the Laffer curve, which really, truly has changed the world and changed the world in a very good way. So congratulations to Arthur Laffer. Listen,
I get him a Presidential Medal of Freedom.
There you go. What else can he get?
Working
He did, by the way. He did.
That's not, but seriously, back to gold. Because, you know, right at the end, Mike Lee's a very smart guy, right?
Yes.
You know, he mentioned the dollar. People, is dollar losing confidence? Is that what's driving up gold? Or let me just ask one more option. Maybe it's not a bad thing. Like, if you own gold, you're making a lot of, the stock markets are booming. Maybe the gold market is just having a run. I don't know, and it's going to get whacked back down or not. I mean, I don't know what to make of it.
No, it's making me nervous. I mean, I don't like to see a rising gold price. That is, as Arthur just said, that's generally correlates with more inflation and a weaker economy. Remember, in the boom years of the 1980s and 90s, when Clinton was president, gold was flat and actually fell substantially. I'd like to see a falling price of gold. I do think there's some tariff turbulence and nervousness about tariffs. But overall, you look at Trump's agenda, cutting taxes, reducing regulation, pro-America energy policies, pro-mining, all of this stuff. It's so bullish, Larry. So I remain quite bullish on the U.S. economy. I don't want to. Sometimes Trump talks about a lower dollar and a weaker dollar, and I don't like that. You know, I'm with you. I like the king dollar idea. So but we will see.
I'd like to see Scott Bessent, Treasury man, come out for king dollar.
Defend them.
Love it. Love it.
I'd like to see him just say, it's not just to have the dollar as the world's reserve currency, which itself is a good thing, but I would like him to say, just right now, we want king dollar, reliable dollar, stable dollar. Confidence building dollar. We want to attract investment in capital, right? The race for capital, we used to call it, Steve, the global race for capital should be won by the USA.
We're winning that race.
We have all the incentives you talked about on taxes and deregulation, but one incentive is a stable dollar, isn't it?
Yeah. In fact, if you look at it, gold is the first refuge of the cautious.
Right.
So when you have problems is when people run into gold. We don't have economic problems coming. I mean, they're not. And the other one is really important, Larry, is it's looked like peace is breaking out. I mean, what's happening in Gaza with Trump, what Trump's doing on getting
why
peace.
isn't that?
Well, I think it will. That's why I said the things. I mean, once these things start materializing, it becomes clear to everyone that we're going to get a much stronger economy, that we're going to get more peace, and that Russia and China are going to negotiate with us. I think you're going to see that gold price fall very sharply. And again, I don't mean to. I mean, there are no return money guarantees here, but it's the way I'm looking at the world, and I think gold's going to retreat very sharply over the next 2 years.
Mark Summerlin was on the show last night. Very smart guy, former White House economist, and he mentioned central banks buying gold because they're worried that we'll confiscate their assets the way we. Now, the we here is a little ambiguous because it was the Europeans that really, together with the United States. But the Russian central bank reserves, about 300 billion, roughly half of their reserves, are in Brussels.
Yes.
All right, 295 some odd billion of those are controlled by the European Union. 5 billion is only that controlled by the United States. So it's really a European issue. But he thought that was an issue, that if someone quarreled with the United States, they would lose their currency reserves, therefore they get out of the dollar and go into gold. It's a thought. The other thought I'll put on the table, yes, peace breaking out in the Middle East.
It is.
Could war be intensifying with Russia, Ukraine, and maybe Europe? Is that an issue? Is the gold market sniffing that out?
I mean, I don't think that Russia is more of a problem today than it was 2 years ago when they invaded Ukraine, Larry. I mean, Biden was president. It looked really bad back then. I don't think it looks anywhere near as bad today. I think the prospects for peace in the Middle East and prospects for peace in Ukraine are better today than they were under Biden when Russia invaded. So looking at that, you'd think gold would be lower today than it was back then.
Is inflation dead enough in your judgment, Steve Moore?
No, we're still above the 2% target. We're still at 2.5%.
So why does everybody want to cut the Fed funds rate? Now, the money supply is not really growing, and the balance sheet's shrinking, okay? But it is sort of odd to me, among conservatives, okay? We're all culpable of pushing for lower interest rates, but you're saying, and I read you in the hotline every single day, and you're still worried about it. Inflation's running almost a percentage point above its target.
So look, I think one of the things that that the Fed does not take into account is supply-side economics. They don't believe that growth is good for lowering prices. I mean, they learned this from both of you.
They don't believe in the Laffer curve. That's the problem.
They really don't.
They don't believe in the Laffer curve.
If you get a burst of growth, and as Arthur Laffer would say, if the economy produces more apples, guess what? The price of apples falls. Look what's happened to the oil price. I mean, it's drill, baby, drill. Mine, baby, mine. Produce more. It's a pro-production, less and dragging costs out of the system through deregulation. We think that we're going to save about $1 trillion in business costs this year just through getting rid of bad regulations. Those are disinflationary.
Yes,
They're not inflationary.
Indeed. So we're gonna do this segment all over again in front of 100 people tonight.
Tonight we're going to do it.
50 years.
No, I look forward to it very much.
Thank you, Larry.
The Laffer curve, in a word, the Laffer curve is
the relationship between tax rates and tax revenues, including sheltering, including real output, employment growth. And if you tax too high and you lower taxes, you can actually increase revenues in certain circumstances, which are, by the way, very plentiful, those circumstances, especially on the rich.
Tell Mondani that, will you?
No, I won't.
Please, because
you tell
New York
Mondani.
has lost $1 trillion of income over the last 10 years from other states because this is the highest tax place in the world. And they want to raise them higher, Larry.
And our banking system and stock exchange is going to Texas and Florida. I remember, and we'll talk about this tonight, but I think it's very important, cut tax rates, and tight money.
That's it.
Sound dollar and low marginal tax rates is a prescription
Bang.
for economic growth.
And free trade.
It was the Mundell-Laffer hypothesis many years ago. It's as good today as it ever was.
Do you remember when you had the two of us on the show with you? That was a classic, Larry.
On another network, I had
Yes.
Robert Mundell and Arthur Laffer, and the ratings were terrible. But it was the most fun I
So
ever had.
Mundell has the Nobel. Where's this guy's Nobel?
He should have had one. He should have had a Nobel years
Yep.
ago.
Not
Trump,
too late.
And Trump should get a Nobel Peace Prize.
He should.
I got to get out there. Arthur Laffer and Steve Moore, thank you, gentlemen. We
Thank you,
appreciate
Larry.
it very, very much.